Welcome, everyone. My guest today is Mike Simonsen, chief economist at Compass, to talk about the housing markets that might see the most traction this spring. Mike will be one of our featured speakers at the Housing Economics Summit on February 10th, and we are looking so forward to that. Before we dive in, I want to thank our sponsor, Trust and Will, for making this episode possible. Mike, welcome back to the podcast.
Sarah, it's always great to be here.
It is great to have you here. And we have such a fun thing to talk about. So, as we're heading into the spring home buying market, it's fun to see some stabilization, some things happening. And I would love to get your view on what is the overall picture there?
So, in the overall market, the data right now is showing sales growth, about 5% more sales happening each week than last year at this time. Inventory, I know as you discussed with Logan, the growth rate is compressing. And one thing you may not have known is that in a place like Florida, inventory is actually negative compared to last year. Fewer homes on the market in Florida now than last year at this time. So that's not true across the country yet. Florida's leading there, but it's a fascinating trend. It's the first time in a long time to be able to say that about Florida. And so sales are up. The growth rate of inventory is contracting a little bit. The big, I think, number that I've been watching and the trend for the spring market that I'm interested in is the relists. So last summer and fall, there were a lot of withdrawals and delistings. And that phenomenon was something we were tracking last year. So these were sellers who were frustrated and waiting for conditions to improve. So they pulled houses off the market. And now we're counting them relisting back on the market. And, it is a fascinating phenomenon. So there are 80,000 single family homes right now that are on the market now that have been relisted from last fall. So they were on the market, they were pulled, and now they're back on. So these are all sellers who were waiting for better conditions. And I think, what's interesting is that I think rates are down, sales are ticking up, like those conditions may be here now.
So, in the Altos data, we always look at price cut percentage, right? And normal market is about 1/3 of homes have to take a price cut before they sell because sellers, they want to get as much money as possible. So how do you look at this and say, what are you going to look at as a success for these relistings? Is it that they will sell without having to go under a price cut, or what are you looking at?
So the thing that I'm watching is that if the relists improve and the weekly pending sales also improves, that means that these are folks who are finding demand for the homes where they didn't find it last year. And so we can look at the weekly pending numbers, and we can also look at for example, the price reduction percentage. So if demand is there for the homes on the market, fewer homes need to take price cuts, so that number can decline a little bit. And that's what we're actually seeing right now in the data is like the price cuts number, it ticked down again this week. There are fewer price cuts on the market now than last year at this time. It's been over a year since we've been able to say that. So there is these are the signals that the buyers are, it's not a huge swing, right? It's not like a massive flood of buyer demand, but it's a change from what we've been able to say for several years.
It's also a positive change because and I know that often we hear about there's this crash coming. And especially when you think about Florida, so much of the negative press about Florida has been this is where we're going to see the biggest correction. It's going to lead the rest of the nation. It's going to pull everything down. So to me, that is very significant.
Yes. And, to be fair, a couple of things, there are plenty of markets in especially southwestern Florida that have had pretty notable drawdowns in price. And it's not clear that's done. So I think we still have price pressures in Florida and in much of the country this year. And really what ends up happening is the price movements can lag the supply and demand changes by as much as a year. And a year ago, inventory was still climbing way up and demand was still way low. And so you get, you get a house that was withdrawn last year and now relisted at a slightly lower price. Those price adjustments are still underway. And so what we have now when we're talking about, buyer demand picking up, one of the things that they're seeing is there's some bargain hunting happening in Florida for the first time in many years. And there are affordability improvements in much of the country in ways that we haven't been able to say for many years. So those are like all underway. And so I don't think we're done seeing the sort of bearish price headlines for the year. I think things like the Case-Shiller index will probably still keep adjusting lower for several months. I think, there's still those in the market. There's plenty of headlines of bearish price numbers. There's no big dramatic drops in pricing, but we see, if you look at, for example, the price per square foot, asking price per square foot around the country right now, the median ask price per square foot is 1.6% below last year at this time. So by that measure, home prices are less than last year at this time. And that's a pretty unusual thing.
Let's talk about some of those other markets where maybe people are finding a bargain, or at least a bargain relative to where they've been, right? When you and I were talking before we started recording, you said San Diego, which I love San Diego. My daughter lived there for many years. One of my favorite places. Kind of hard to believe that there's anything there that is relatively speaking a good deal.
It's funny. A place like San Diego is has had relatively more inventory. I wouldn't necessarily call it bargain hunting yet, but what's also happening in San Diego is we at Compass released our ultra luxury report last week. And this is where we look at homes that are $10 million and up and the sales of those at that price point. And it's a really fascinating story. So, and this is actually where San Diego jumps in again. So at homes at the ultra luxury level, even though at the broad market, home sales are just barely trying to climb out of the cellar, sales at the price point of 10 million and up actually grew a lot. They grew by 22% last year.
Wow.
And a place like San Diego has been part of that story. San Diego had almost no home sales over 10 million back in, say, 2019. And now there are, a few dozen a year. And so that is, and let's see, actually a few dozen, 66 we counted in 2025. And so San Diego has had a lot of growth in that kind of way over time.
Interesting. That ultra luxury market, how do you see that across the country? Like you said, you see it going up. So it's really sort of the tale of two markets in some ways.
It really is. And I've written about, and we've probably discussed, you and I probably discussed the K-shaped economy. That, there are two legs. There's and this is true, and not just housing, but in so many things. Like if we have a job, unemployment's very low, but hiring is low. So if you don't have a job, it's hard to get one.
Right.
So you have these two different dynamic, two legs of the K. And so, in home sales, we have, equity financial markets at near record highs. You have things like IPOs and M&A that are kicking in. There's a lot of liquidity and cash at the ultra high level. And it is going into hard assets. So, you see, we saw a dip in the ultra luxury in 23 coming off the pandemic boom. So 23 saw a dip, but then 24 climbed and 25 continued to climb in terms of home sales and prices all the way across the board. And so, we're tracking 86 markets that have homes in this price range. Some of them only do one or two at that range, and some like Manhattan have hundreds in the 10 million and up. But it's been a fascinating, journey. So San Diego, really didn't even have a dip in 23. Like San Diego has been a growth market. Palm Beach County in Southern Florida has been a growth market for this price range as well.
Okay, well, coming off of those, that ultra luxury, what else are you looking at? What other areas are you seeing something maybe surprising in the data?
The biggest thing that I am paying attention to this year is that relist rate. Yeah, and these are the homes that were on the market before and were pulled and are now relisted, or are, they are sellers who are thinking of relisting if the conditions are right. And so it can be very tempting to look at this relist, this withdrawal and relist cohort purely as supply, or even shadow supply, like supply that wants to be there, but we aren't measuring it in inventory yet, meaning these are people who tried to sell, couldn't, but are now, will try again. And so because there were a lot of withdrawals last year, there'd be a lot of relists this spring. And my observation is that for the most part, these withdrawals are owner occupiers. So that means they're not like investors or something. That they are, in general, selling a house and buying a house. They're moving up or they're moving down. They're relocating, and they've put off these, the move for a bunch of years. And so now when they relist, that's really two transactions that want to happen. And that's my observation with the data. And so what we have to do is like track it each week. And is that true? And that's why I mentioned, like, as long as these relists are climbing, is the weekly pending number climbing also. And so that relist number is really the one that I'm watching most closely this year. And I was talking with agents today on a big Compass coaching call, and I was saying, if I'm having a conversation with sellers this spring, like, these are sellers who were waiting last year for conditions to improve. And in many ways, they are, like, the data is showing improvement.
It's really good. We always think about, well, it depends on where you are on the side of the agreement, right? Are you a buy side agent? Are you a seller's agent? Are you in mortgage? Because all of those are different viewpoints. But from my perspective, everything you've said feels like we just have more movement, more traction in the market, because you have people who want to sell. We have a little bit lower rates, right? Rates more around 6%. We're not seeing those huge volatile up and downs. We're seeing some other things stabilize. So it feels like that's the kind of movement that can make for a good spring home selling season.
Yeah, and to be fair, it's not like a massive
Right.
boom, but it is notable and it seems consistent. It shouldn't be that much of a surprise. Mortgage payments, if you look at, like, the average, the current mortgage rate and the median price that people are paying for homes, like, the prices are 8 or 9% cheaper than they were last year at this time. Like,
Wow.
and that's you got to figure that there are more people who are making that move as a result.
Absolutely. Okay, well, let's talk about some of those hot spots we always check in on, because they're kind of top of mind. Let's talk about Austin.
So, we talked already about Florida and how the Florida inventory is tightening in Florida. Texas is still lagging that a little bit compared to some of the other states. So Texas inventory is still up about 10% year over year. And so Austin is the poster child of that, where we've got like 4 years of flat prices, down even prices in Austin. And I haven't yet seen a turn in the market in Austin. I expect that we will be able to measure home sales increases year over year in Q1 in Austin, but it's been really close so far. And so I don't know exactly why Texas is lagging Florida in this moment, but like Florida home sales is, by our count, is 10% more pendings each week, newly pending home sales each week, and haven't quite seen that growth in Texas yet. But here's the thing: on the current trajectory, if that stays where we have continued to have rates stay in the low sixes, we have the momentum, the current trajectory that we're on, I could see maybe by June, Texas would be in this mode of being less inventory year over year, because last year inventory was rising pretty quickly in first and second quarter when it was super expensive. Mortgages were 100 basis points or 90 basis points higher.
Yeah, it's a great point. And when you look at Texas, is there a really big difference between, we talk about the Texas Triangle, between like Dallas Fort Worth, which I know that we had more inventory maybe than some other parts of Texas, like versus Houston, for instance?
Yeah, Houston is the like least volatile of the two triangles. So Austin, Dallas both had a lot of volatility. Austin had a lot of California migration,
right?
Inbound California migration, and that slowed way down. And that's really where you had higher income, and you had like that demand coming in from California and even places like New York and things, where that was driving a lot of the boom in Austin. Where Dallas has a much more broad inbound migration pattern. And so that migration has slowed also, but it's a less dramatic effect. And then I think Houston probably seems to have, if we look at the latest migration data, so across the country, Houston has held up a little more, less volatile than Austin and Dallas were.
When all those Californians moved to Austin, and was it 21? And then we had like the worst, like seriously, the hottest summer we had in like 10 years, 15 years. And I was just like, you just felt so bad for those people. You're already coming from California, which in many parts is so beautiful and the weather's so beautiful. I felt very bad for them as a Texan. Yeah. I was like, I'm sorry. It was especially bad right then. So, if they didn't stick around, they're probably like, this place is hotter than the sun,
Yep. Well, they some people went there intentionally for that. So.
Well, there you go. Is there a place that you're looking at that you're like, wow, this might be the tightest inventory, across the whole nation? Where would you put that right now?
So Connecticut has been the tightest through all last year. Chicago area is also still very tight, just barely getting more, maybe a few percent more inventory than last year, just barely. And so that inventory growth is welcome. And that's because, we talked about that migration pattern. We're not selling in Chicago to buy in Dallas or Denver or Phoenix. And so inventory is tight in Chicago, and it's still, ample across the Sun Belt. So, across the Midwest and Northeast, that's still true. Inventory, inventory is still tight because we're still selling few houses there. We're moving less. And it's not just a real estate conversation. It's a jobs thing. It's a hiring thing. So if I have a good job in Chicago, I'm worried about being hired at a new job in Dallas or Phoenix or Denver. And so I'm not quitting my job. I'm not selling my house to move across the country and buy. And so the macro number that I'm looking for this year that I'm interested in is tracking the hires rate. So do we start getting businesses start to hire a little faster? That's been really slow. If it starts to loosen up, I think that would be a bullish sign for home sales transactions, especially across the Sun Belt. If it starts to feel like companies are able to hire more, and maybe that's because Fed rate cuts or things turn the corner. If we get lucky, that would be in addition to having cheaper mortgage rates and things that would help sales numbers continue to climb later in the year. But right now, it's still pretty. That hiring number is still pretty tight.
I think it just points out like the housing market is very complex. There's so many things that go into this. Just the things that you've mentioned on this podcast. I mean, there's a lot to think about. Glad we have you on. As always, love to get your insights. So, Mike, thank you so much. And I do want to say I look forward to seeing you next week at the Housing Economics Summit. Very excited for your session there and just the interplay with you and all of the other amazing economists that we have coming.
Yeah, that's great. That's a great event. I'm looking forward to being there and seeing everybody.
All right. We'll talk again soon. Thanks, Mike.
Thanks, Sarah.